Hey guys, Kyle here. An LLC, or a limited liability company, is a structure that so many businesses, freelancers, and even solo entrepreneurs choose to formalize their business. The truth is that forming an LLC creates a separate legal entity for your business, which helps protect your personal assets from business debts or even legal claims. This means if your business ever faces a lawsuit or financial trouble, your personal money and property are generally shielded from liability. Freelancers may choose an LLC to gain this liability protection to separate their personal and business finances much more clearly. Operating as an LLC can also add so much credibility to your business. So in this video, what we're going to be doing is walking you through step by step, not only how to set up an LLC, but the extremely important reasons why you would want to do so in the first place, as well as the massive amount of benefits that you can take advantage of as an LLC owner. So without further ado, let's get into it. Now, by default, the IRS does not treat a single member LLC as separate from its owner for federal income taxes. So it's basically taxed like a sole proprietorship. This basically means that the LLC's income and expenses are reported on Schedule C, which is basically a form attached to your personal Form 1040 tax return. On that Schedule C, you list your business freelance revenue as well as all of your deductible business expenses to calculate the net profit or the net loss of your business. That net profit is then ultimately included with your other income on your personal tax return and is ultimately subject to income tax. In addition to this, you'll pay self-employment taxes based on your business's profit. And since as a freelancer, you don't have an employer withholding Social Security or Medicare for you, you will have to hold those taxes for yourself in a separate savings account. Self-employment tax covers both the employer and the employee portions of Social Security and Medicare, totaling about 15.3% of your net business income. Now, the big advantage here of this default setup is its simplicity. You only have to file taxes on your business's income as part of your personal return, which basically makes taxes 10 times easier, especially if you're a one-person business. Another option for a single member LLC is to change its tax classification by electing to be treated as an S corporation. An S corporation, or S Corp for short, is not a default type of legal entity, but rather a special tax status that you can request from the IRS, commonly by filing Form 2553. If you end up choosing S Corp status, your business remains a pass-through entity for taxes, but ultimately you'll handle your income and taxes in a much different way. As the owner of an S Corp, you are required to pay yourself a reasonable salary as an employee of your own company. You'll run payroll for that salary and pay Social Security and Medicare taxes on those wages just like any other employer would for an employee. Any remaining profit after your salary can be taken as an owner distribution, which you pay income tax on, but which is not subject to self-employment tax. In effect here, the S Corp election lets you save on taxes by reducing the portion of your income that's hit with the 15.3% self-employment tax, provided that you follow IRS rules for paying yourself a fair salary. An S corporation election is usually only worth considering once your freelance business is earning a high enough profit to justify the extra paperwork and the costs associated with it. There is really no magic number here. If your profits are modest, sticking with the default LLC taxation is oftentimes much simpler, and the tax difference may be kind of negligible here. Electing S corporation means you'll have new responsibilities like running payroll, filing a separate corporate tax return, and keeping very detailed records. These additional requirements may mean higher accounting costs or more of your own time spent on administration. The IRS also tends to scrutinize S Corp filings to ensure people are paying themselves a reasonable salary and ultimately not abusing the system to avoid paying taxes. Now, if we flip this to a single member LLC using default tax treatment, federal tax filing is done through your personal tax return each year that you complete it. You will complete a Schedule C, which is basically a profit or loss statement from your business as part of a Form 1040, detailing your business's income and expenses. If you have a net profit, you'll also calculate your self-employment tax, which is going to be Social Security and Medicare, typically using Schedule SE, and ultimately you'll include that in your final return. The tax filing deadlines for your LLC's income is the same as your individual tax deadline, which is usually going to fall around April 15th. Since the business is essentially part of your personal taxes, you do not need to file a separate federal return for the LLC itself when you are taxed as a sole proprietor. However, make sure to keep records of your LLC's finances distinct, because you may need to provide information about your business on state tax returns or on other forms. Also, be aware that some states require LLCs to file an annual report or pay a franchise tax or fee, so stay informed about your state's specific requirements to remain in good standing. If your LLC is taxed as an S Corp, the tax filing process is much more involved, with separate forms and their own deadlines. The first thing you'll need to do is have officially elected S Corp status by filing that Form 2553 on time. That way, the IRS recognizes your LLC as an S Corp for that tax year. And each following year, the LLC must file its own corporate tax return on Form 1120S, which reports the company's income, expenses, and ultimately the distribution of profits to the owner. The truth is an S Corp doesn't pay income tax at the corporate level. It passes through any profit or loss to you as the owner via a Schedule K1, which is issued after filing the 1120S. You'll then go ahead and use that information on the K1 to report the business profits on your personal tax return, much like other pass-through income. If you follow these steps exactly, you can get set up really quickly with paying your taxes properly as a freelancer, business owner, or an online entrepreneur. If you guys found this video helpful, or if you have more questions, make sure to leave them down in the comment section. If you're interested in getting started with a service to make this process easier, I would highly recommend getting started with something like LegalZoom. Just click that link down in the description. You'll be taken to a website that looks something like this one. You'll simply pick which service that you need the most. They have some amazing business tax experts out there that will help you get started with the right formation of your business. That way you can pay your taxes easily and effortlessly. Once again, if you want to get started with LegalZoom, make sure you use that first link down in the description. Hopefully you guys enjoyed this video. Make sure to hit that like button and hit that subscribe button so you never miss any of our future videos. Other than that though, I'll see you guys in the next one.